Picture this for a moment. You wake up on a quiet spring morning in 2026, check the markets out of habit, and see something that doesn't match the mood of the world at all. Bitcoin is soaring. Influencers are celebrating. News tickers look like victory parades. And yet, if you listen closely, past the cheering, past the to the moon predictions, you can feel something tightening under the surface. A pressure most people can't name, but you can. That feeling is the reason this guide exists. Today, we're going to walk through the story behind the coming Bitcoin collapse and the strategy Warren Buffett would use to come out ahead. Not by chasing the hype, not by reacting to fear, but by watching the crowd, understanding the real value underneath all the noise, and moving with intention while everyone else moves with emotion. This isn't about predicting the exact day or hour the market breaks. It's about noticing the calm, the behavior, and the excitement that always shows up before a panic. The same pattern has repeated itself across history. The dot-com bubble, the 2008 housing run-up, the 2021 crypto boom. Every time, the signs were there long before the headlines admitted anything was wrong. By the end of this journey, you'll understand those signs with the kind of clarity that helps you stay steady while everyone else is losing their balance. You'll learn how to think in cycles, not moments. You'll see why the smartest investors don't fear corrections. They wait for them. And you'll have a clear, practical blueprint inspired by the mindset Buffett has used for decades. So let's start at the beginning. Before the panic, before the crash, before the screaming charts and emergency live streams, there is always a quiet moment that tells the truth. That moment is where our story begins. You notice it first in the silence, not the literal silence of a room, but the quiet rhythm of the market itself. Prices move, but without urgency. Candles drift upward in slow, steady steps, like they're saving their energy for something bigger. You've lived through enough cycles to know that this kind of silence isn't peace. It's pressure. And pressure always finds a way out. You scroll through your charts and feel a strange familiarity hanging in the air. It's the same subtle tone you sensed in the months before the 2018 crash, the same muted thrill before 2022 unraveled. It's like déjà vu, tugging at the edge of your awareness. You can't prove anything yet. You can't point to a single indicator or headline that says danger, but you feel it. And that feeling is louder than anything. You hear traders laugh on social platforms. They talk about a new era beginning, a decade of unstoppable growth, the kind that becomes legend. They remind you of the old stories, how early Bitcoin believers retired young, how Ethereum made millionaires overnight, how every dip eventually launched a new wave of riches. The stories are inspirational, but you've learned to read between the lines. When people talk about the past too fondly, it often means they're trying to convince themselves the future will mimic it. And that's when Buffett's message starts echoing in your mind. His tone isn't urgent. He doesn't try to shock anyone. He never talks about crypto directly, yet somehow his warning feels tailor-made for this moment. He once said, "You should pay attention when others grow comfortable." And comfort is everywhere now. It's in the memes, the forecasts, the to-the-moon jokes. It's even in your own heart, tucked somewhere between confidence and caution. You stare at the charts long enough to notice the small things. Volume tapering off, volatility shrinking, liquidity looking thinner than you remember. These signs don't scare most traders. They call it consolidation, a healthy reset. And maybe it is. But you know something they forget. Markets rarely collapse at their loudest. They collapse at their quietest. You glance at Bitcoin's smooth curve and feel the ghost of old bull runs. It reminds you of watching fireworks right before the last spark falls. There's beauty in that moment, but also uncertainty. You can't tell if the show is ending or about to explode into something massive. That tension holds your breath hostage without you even realizing it. You think back to stories old investors shared about the stock market before major crashes. People always describe those final days the same way: calm, steady, reassuring. The 1929 buildup felt like that. The dot-com bubble felt like that. Even the 2008 disaster began with a period of eerie quiet. Those events were before your time, but their rhythm lives inside every chart and every psychology lesson you've absorbed. The emotional part of you wants to believe the optimism floating around. You want to imagine a world where the charts keep climbing without interruption, where new investors finally win for once, where the next year becomes a celebration of breakthroughs instead of breakdowns. But the rational part of you knows better. It knows that silence doesn't equal safety. You check your favorite forums and notice something unusual. People are arguing, but not about risk. They argue about which coin will 5x first, which narrative will dominate next, whose prediction is most prophetic. Everyone is trying to be right. Nobody is trying to be careful. That's always a red flag. You watch new influencers rise out of nowhere, riding the wave of excitement. Their voices sound confident, even rehearsed. You've seen this pattern before too. It always emerges right before liquidity dries up, before leverage builds to unstable levels, before people forget that safety is not weakness. You feel a strange mix of calm and tension as you absorb this environment. The calm comes from knowing you've grown wiser since earlier cycles. The tension comes from realizing that others haven't, and when the crowd is unprepared, storms hit harder. You think about the beginners entering the market now, the ones who buy their first token with wide-eyed enthusiasm. You remember being that person once. Back then, you believed charts always bounced. You believed adoption only went up. You believed corrections were temporary inconveniences. Those beliefs carried you until they didn't. Until your first real crash introduced you to the side of trading nobody advertises. That memory sharpens your senses. You recognize how easy it is to fall into the trap of believing the market owes you something. The moment you start thinking you deserve profit is the moment you begin losing discipline. And right now, you see an entire generation of traders slipping toward that mental cliff. So you slow down, you breathe, you let the quiet settle into your mind instead of your emotions. Because you know this quiet isn't random, it's a sign. It's the market inhaling before something major happens. You notice how articles are shifting in tone too. A few analysts begin whispering concerns about over-leveraged positions, overvalued projects, and unregulated sectors growing too quickly. But their voices are drowned out by louder, brighter predictions. People always prefer good news, especially when the charts agree. But you don't ignore the whispers. You never have. Then you see it. An old video clip of Buffett where he talks about bubbles. Not crypto, not stocks, just bubbles in general. He explains that bubbles grow when people chase what they don't understand, and they burst when that misunderstanding becomes too big to sustain. His words settle into you like a puzzle piece clicking into place, and suddenly you realize the truth you didn't want to admit. The calm you're feeling right now is the calm that comes right before a shift. Not necessarily tomorrow, not next week, but soon enough that you can sense the market bracing itself. Investors call it confidence. You call it tension disguising itself as comfort. You look at the charts one more time. They appear peaceful, almost too peaceful, but you aren't fooled anymore. You see what others ignore. You hear what others drown out. You recognize the pattern hiding in plain sight. You're standing at the edge of a quiet that isn't real. A quiet that feels soft but carries weight. A quiet that holds its breath before the world remembers how fragile growth can be. And whether the crash arrives slowly or hits all at once, you know one thing for sure. This calm is not the end of the story. It's the beginning of the warning. You don't talk about it much, but you feel it in the background. That small, persistent hum of worry that hides behind every moment of confidence. You carry it quietly, almost carefully, like a piece of glass you don't want to draw attention to. You tell yourself you're experienced now. You've survived crashes, you've handled volatility, you've learned how to stay calm. But deep down, you know there's a part of you that still isn't fully honest with itself. You see the crypto market rising again and you feel two things at once: excitement and hesitation, hope and suspicion. It's confusing, like standing on a bridge that looks solid but sways when the wind hits. You want to believe this time will be different. You want to trust that the market has matured enough to avoid the old mistakes. But you've been here before. You've watched these emotions play out like a film you know too well. You don't fear losing money as much as you fear repeating old decisions. That's the part that bothers you most. The memory of watching your portfolio shrink faster than you expected. The memory of holding positions long past the point of logic because you didn't want to admit you were wrong. The memory of telling yourself it will bounce, even when every sign said otherwise. Fear takes many shapes, and the quietest kind is the one you refuse to name. You scroll through your feeds and see a familiar pattern unfolding. People celebrate small wins like they're life-changing milestones. They brag about leverage trades that could crumble with one wrong candle. You know how dangerous that confidence is. It's the same confidence that swept through the market before the 2018 crash, the same confidence that fueled the 2021 bubble. You remember the emotions in those times, the noise, the excitement, the greed disguised as optimism. And you feel things tighten in your chest because you recognize the same tone creeping back now. You try to push the thought aside, but it returns, stronger, more precise. You know the market isn't driven by charts alone. It's driven by psychology, and psychology always follows predictable waves. When people start believing the worst is over, that's usually when they stop protecting themselves. They loosen their discipline, they take larger risks, and slowly the foundation weakens. You've learned to notice that shift. Others call it confidence. You call it exposure. There's another fear you don't admit, not even to yourself, the fear that you might be getting pulled in again. Not consciously, but subtly. You tell yourself you're being cautious, but you catch your mind wandering toward what-if scenarios. What if this rally becomes the next major bull market? What if the projects you ignored explode in value? What if hesitation makes you miss the moment everyone else benefits from? These thoughts don't feel dangerous at first. They feel normal. But they are the first cracks in rational thinking, the first whispers of emotional trading, the first hints of greed pretending to be insight. You've learned that fear isn't always a trembling feeling. Sometimes it's a quiet pressure that pushes you toward decisions you later regret. You think about Warren Buffett again. His tone always carries that calm certainty. He doesn't talk about fear the way traders do. He talks about fear as something useful, something necessary. He once said that fear and greed are the two forces that destroy investors, but they're also the two forces that teach them. That's why his warnings feel so personal to you. He doesn't use dramatic words. He doesn't describe worst-case scenarios. He simply reminds you that markets punish emotion. And right now, the market is overflowing with emotion. You can almost feel it pouring through the screen every time you open a chart. Fear doesn't show up as panic during the rise. It shows up as silence, as the small voice that says, "Don't worry, this can only go up." You've heard that voice before. You've listened to it, you've followed it, and you've learned how wrong it can be. That's why you're paying attention now. You notice the red flags that others scroll past. You see liquidity pockets thinning. You see influencers turning bolder with their predictions. You see newcomers entering the market with unrealistic expectations. You see institutions slowly reducing exposure while retail traders increase theirs. These shifts aren't loud, but they're meaningful. Fear sits in your body as you absorb these signals, not the kind that paralyzes you, but the kind that forces you to think more carefully. You've come far enough to recognize that fear isn't an enemy. The real enemy is pretending you don't feel it. You remember friends who lost everything because they refused to acknowledge their fear. They doubled down instead of adjusting. They held through crashes because they didn't want to face the discomfort of changing strategy. They convinced themselves things would get better just because they wanted them to. You promised yourself you wouldn't become one of them again. Fear reminds you of that promise. It reminds you that you're not invincible, that your instincts can fail you. That discipline isn't a trait, it's a daily decision. You think about the quiet moment right before every major crash. Not the dramatic fall, not the panic, but that small moment when traders feel like nothing can go wrong. That's where you are now, inside that quiet, inside that strange emotional space where confidence masks instability. And that's why this chapter matters, because it forces you to acknowledge something you don't say out loud. You're worried, not terrified, not panicking, just aware. Aware that the signs are returning, aware that the crowd is losing caution, aware that emotion is slowly building under the surface. This fear isn't weakness, it's awareness. It's what separates the traders who survive the crash from those who freeze when it hits. It's what keeps you grounded when the market becomes irrational. It's what pulls you back from reckless decisions everyone else seems comfortable making. You take a quiet breath and admit it, to yourself at least. You're afraid of being blindsided again. You're afraid of ignoring the warnings. You're afraid of trusting the crowd instead of the pattern. And strangely, admitting that fear makes you calmer. It sharpens your thinking. It reminds you of all the lessons the market taught you through pain. It helps you see the next chapter clearly, without the haze of denial clouding your vision. This fear isn't the kind that breaks you. It's the kind that prepares you. This is the fear you don't admit, but now you do. And that changes everything. Hope is a powerful thing. It keeps you moving when the market feels uncertain. It gives you reasons to believe the next cycle will reward your patience. It reminds you of everything you've survived. But there's a moment, quiet, subtle, easy to miss, when hope shifts into something else, something heavier, something that blinds you instead of guiding you. You've seen it happen before, not just to others, but inside yourself. It starts with simple thoughts. Thoughts like, this dip will recover, or this project is too strong to fail, or this time the market isn't like the past. The statements sound harmless, rational even, but when you say them often enough, they become emotional shields against reality. They protect you from fear, but they also protect you from truth. That's the trap. Right now, you can feel hope spreading across the crypto space like warm sunlight. It's comforting. It's reassuring. After months of uncertainty, traders finally feel like they can breathe again. Every little rally sparks excitement. Every green candle becomes a sign from the universe that everything is going to work out. No one says it out loud, but you know what they're thinking. The crash already happened. It won't happen again. But that belief doesn't come from analysis. It comes from longing. People aren't hoping because the fundamentals demand it. They're hoping because they're tired of losing, because they want redemption, because the market has conditioned them to expect miracles after suffering. They aren't looking at risk, they're looking at relief. You watch influencers repeat the same messages. Crypto is unstoppable. We're entering the golden decade. This bull run will be different. The louder the optimism grows, the more the underlying fear fades. And that's where danger begins. Not when people are scared, but when they're too hopeful to recognize they've stopped thinking. You understand this pattern because you've fallen for it before. You remember that period during a past cycle when the charts were glowing green and you convinced yourself nothing could go wrong. You wanted to believe so badly that you stopped questioning. Looking back, that was the turning point, not the drop, not the panic. The turning point was when hope became your strategy. Now, as you watch the same emotional rhythm build in others, a strange heaviness settles in your chest. You know how this movie ends, not with excitement, but with disbelief. Disbelief when prices don't bounce, disbelief when support levels evaporate, disbelief when projects that felt promising suddenly disappear. Hope becomes a trap the moment it replaces preparation. You scroll through forums and see retail traders cheering every rise as if it's destiny. They talk about life-changing wealth like it's just a few weeks away. They say things like, there's no reason to worry. The market has matured. You catch yourself shaking your head without meaning to. You've heard that exact sentence in every cycle. When people say matured, what they really mean is, I hope the pain never returns. But the market doesn't respond to hope. It responds to behavior. It responds to liquidity. It responds to leverage. And leverage is creeping back into the system like a shadow stretching across the floor. Thin at first, but growing, getting darker. When you look at the charts, you see things others brush aside. Overextended patterns, unrealistic projections, volume that doesn't match conviction. It's not that the market looks weak, it's that it looks artificially confident. And artificial confidence is one of the oldest warning signals in trading psychology. But you don't say anything publicly. You don't argue with anyone. You've learned that people don't want truth when they're comfortable. They want reassurance. They want confirmation that their dreams are safe. They want to feel like they've already won. You let them talk. You let them celebrate. You let them believe. That's not your battle anymore. Your focus is on staying clear-headed while the crowd slowly drifts into emotional territory. You watch beginners enter the space again, the ones who swore they were done with crypto after losing half their savings years ago. Somehow they're back, expected to succeed because this time they know better. You wish that were true, but time doesn't erase emotional patterns. It just dulls the memory of how sharp the pain felt. And when the pain fades, hope fills the empty space. You can feel that psychology spreading now. People aren't scared enough. They're not cautious enough. They're not questioning enough. And that lack of fear creates the perfect breeding ground for a devastating correction. Hope makes people ignore warning signs. Hope makes them trust unproven promises. Hope makes them hold positions they should have trimmed months ago. Hope makes them add to bags they should have never filled. Hope makes them forget risk exists, and once they forget, they're exposed. You sit with this realization, letting it settle. You're not trying to be pessimistic. You're trying to be honest. There's a difference. Honesty looks at the whole picture, not just the parts that feel good. You can acknowledge the potential in crypto without pretending it's invincible. You can believe in long-term growth without denying short-term danger. This is where your mindset separates from the crowd. The crowd wants comfort. You want clarity. So you ask yourself an uncomfortable question. How many traders right now are genuinely prepared for a 90% crash? You already know the answer. Very few. Most are too hopeful to imagine that possibility. They see the current rally and assume it erases the risk. But rallies don't erase risk. They amplify the emotional buildup that leads to catastrophic corrections. Hope becomes a trap when it becomes louder than discipline. You look at your positions and notice something interesting. You're not as attached as you used to be. You can imagine adjusting your portfolio without emotion. You can imagine taking profits early or moving to stable positions without hesitation. You've learned to separate the market from your feelings. It doesn't mean you're fearless. It means you're aware. Hope still lives inside you, but it doesn't control you. And that's the point. Hope is healthy when it's balanced with awareness. It's dangerous when it replaces it. Too many traders right now are holding on to hope without holding on to discipline. They're leaning too far into expectations and ignoring possibilities. They're assuming the market will reward optimism instead of punishing arrogance. You understand why this happens. Hope feels good. Hope masks risk. Hope numbs doubt. Hope makes uncertainty easier to carry. But in trading, the moment something feels easy is the moment it becomes dangerous. You close your eyes for a moment and breathe. You let yourself feel hopeful. Then you let that hope dissolve until only awareness remains. Because awareness is what keeps you alive in markets like these. Hope doesn't protect you from a crash. Preparedness does. You open your eyes again with a soft clarity. You're not here to avoid hope, you're here to avoid the trap it becomes. And now you see it clearly. If there's one idea you should take with you, it's this: panic doesn't destroy wealth, it just transfers it. The people who lose the most during a collapse are usually the ones who are celebrating the loudest on the way up. And the people who win are the ones who watched the excitement with a calm eye, waited for emotion to peak, and stepped in when everyone else sprinted out. The 2026 Bitcoin crash won't be remembered for the drop itself. Markets fall all the time. It will be remembered for how many people ignored the signs simply because the calm felt comfortable. Every major downturn has a phase where nothing looks wrong on the surface. That's the moment most investors drift off. It's also the moment when a few start preparing. Buffett's philosophy isn't about calling crashes, it's about using them. He looks for times when fear pushes prices below their real worth, when noisy assets reveal what they're genuinely made of, and when the crowd starts making decisions for emotional reasons instead of rational ones. That's where opportunity hides, and that's where steady hands outperform fast hands. As you move forward, keep your focus on behavior, not predictions. Watch what investors do when markets are calm. Watch how quickly they switch to panic when momentum slows. Study the gap between excitement and reality. That gap is where collapses form, and it's also where long-term profits start. You now have a clear framework, a story to reference, and a strategy built on patience, discipline, and understanding value.